RBI has just cut the interest rates, and this move is about to shift the balance of power in the Indian economy. Whenever rate falls, it's not just a technical or monetary adjustment, it's a strategic push to unlock credit, fuel demand, and accelerate growth. For borrowers, this marks a defining moment as home loans, auto loans, business loans, and all other floating rate lending products are expected to become much more affordable as banks go through this transmission process. Reduced EMIs directly improve purchasing power, and with that comes renewed demand. Real estate transactions that were stuck so far may now move ahead. Automobile sales could pick up pace anytime, and MSMEs struggling with high working capital cost might finally breathe easier. Rate cuts have the power to convert hesitation into action. For depositors, the situation may not be as friendly because lower deposit and FD rates are almost inevitable as well as unavoidable now. And returns on traditional savings may also start to look a bit weaker. But this is the moment when investors must start reassessing. The time for passive interest-dependent financial planning is almost over, and today, risk-based, diversified, and strategically balanced portfolios become not just an option, but a necessity. From a broader economic perspective, cheaper credit means more liquidity flowing into the system. This encourages consumption, expansion, as well as investment. Businesses planning new projects, reinforcing old loans, or scaling operations now have a much more favorable environment to optimize their capital structure. But the real impact, however, depends on transmission as to how efficiently these banks pass these benefits to the end user. Because without that, a policy announcement remains only a headline. Policy shifts create windows, and those who read them well lead to the curve. Because in finance, timing isn't just important, it's almost everything. Whenever RBI cuts rates, it is never or about numbers or percentages. It's a signal. It's always a signal, a strategic message to the market that the economy is ready for the momentum, that liquidity needs to move ahead now, and that growth must accelerate at all costs.